Hi guys, Paul Seals here. Thanks for joining us for Conscious Investor. Today we're going to be talking with Derek Whitaker about embracing volatility in hostile markets for serious profits. And it's definitely interesting times that we're in at the moment, and I'm sure we're going to cover off that in a lot more detail over this period of time. I've known Derek for a number of years now, supporting a lot of clients in relation to aspects of trading. Derek Whitaker, thanks for joining us.
Hey, thanks for having me. Awesome to be here, guys. Thank you for joining us as well. And it's been great working with Paul pretty closely over the last few months too, and finding some common themes coming out. There's a lot of you concerned about where the world's going, what things are happening. And I just want to say this, we live in an exciting period of history. It's really, really exciting. And in that, the glass is always half full for me. There's great opportunity in this sort of period. And I'm going to go through some of that tonight, if that's all right. I'll just share my screen with you. There you go. There's a picture of me. Why is it in a park? Well, we weren't allowed in the restaurants during that period of history where the unvaccinated had certain restrictions, particularly in WA. So we had to get into a park where people were walking their dogs, and I love that because it's like stuff, yeah. We're going to do it anyway. So here we go. But I better do a disclaimer before we start. I'm feeling very relaxed around you, Paul, and your group here, which is good. We did tell you up front, we're not a licensed financial planning, accounting, or law firm. We're simply an education company who'll give you factual information. We do not give you general specific advice around finance, business, investing, options, trading, or anything else. That's not what this presentation, of course, does. Please see a licensed financial planner when it comes to any investment advice you need. Just a little bit of background about myself. This is my background. I started my gig in the financial industry in some high-end accounting, law, and financial planning firms. And there I was really mentored in high-level asset protection, tax minimization strategies. But my heart was always interested in trading. And I got to get exposure to hanging around amazing traders and property investors and entrepreneurs. And the incredible thing about consulting is you see people's mistakes and what's working, what's not. And you learn a lot by observation, hearing people's stories. Over that period, I also ran a US property syndication just after the global financial crisis, where you could buy properties for less than what you could build them at that time. So we swooped with that investment opportunity. As I mentioned, I was mentored by stock options traders. They were making about $40,000 to $60,000 a month, and agreed to show me how they were doing that. I then was approached to start teaching this stuff that I learned, and eventually branched out and found that I enjoyed the education side more than the consulting side a lot more. I found that that was my space, that I really enjoyed watching students, the light bulbs go on, so to speak, and they get very complex strategies, and being able to explain it simply to them has always been fun for me. I come from the media industry originally, a communications background. I was kind of in independent media. And I was also approached to write a course on stock options trading for the registered trading organization, Mentor Education. Mentor, unfortunately, are no longer around, but they were giving a lot of qualifications to financial planners and accountants in that space, with all the compliance that's required in the industry. I'm part of a private trading group that trades for wealthy people. And I run a church foundation that teaches people on the spiritual laws of finance. So I've got a few things going here. That's me professionally. We are in the middle of a huge wealth transfer right now, and I'm so excited. And you see how this is all setting up. It's for me, a very once in a generation opportunity right now. Probably even more than that, because this has been going on for centuries. And a lot of this is just the carpet is being pulled, the rug's being pulled out from under a lot of the globalists and their agenda. And it's really, really exciting to be watching and witnessing this. And there are a number of changes that you're probably aware of that's happening geopolitically at the moment. I'll just go through a few of them because there's so much going on, and then I'll get into some trading. But what you've got to understand is politics, economy, and interest rates are the three things that affect the stock market. And so this is why I want to touch on this briefly. I tell you what, who needs what's going on in US politics at the moment has put soap opera out of business. It's so much far more interesting to actually watch what's going on in reality than watching soap opera. Not that I was a soapy fan, but who needs that industry when you've got reality going on around you? We've got nations that are moving back to the gold standard, which is huge. With the Ukrainian-Russian conflict, NATO basically put sanctions on Russia, blocking them out of what we call the SWIFT banking system, which is the ability, the technology that moves payments, cross-border payments from nation to nation. And because they were not allowing people and investors to hold on to rubles, Putin had a problem. And what he did to stabilize his local currency is he put it back on the gold standard with 5,000 rubles equaled 1 ounce of gold. This was hugely significant when he made this move. And we're watching nations follow. Zimbabwe and its Zimbux, it's gone to a new currency itself. Zimbux is based on gold, and it also has a mixture of other precious metals as well as foreign currency backing its own currency. Ghana is looking at it. We're seeing a lot of these nations where inflation's been absolutely a problem over the last few years, starting to move onto an international gold standard. We're also seeing nations, and this is significant because a lot of these nations that are off the gold standard, which is printing money like it was going out of fashion. And we certainly have seen that in the last 4 years. The Democrat administration in the United States, the trillions and trillions of dollars of debt, if you look at the debt calculator, it's just phenomenal. We're seeing nations move off the petrodollar, which is basically America did an agreement with Saudi Arabia about 50 years ago where they, or was it 50 or the 70s? Yeah, 70s. It was 50 years ago or so. Time flies when you're having fun. Where they basically would protect them in exchange for only allowing US dollars to be used to sell oil from nation to nation. Now, Saudi did not reinstate or renew that agreement that was due this year, a few months ago. This is huge. And that was an act of war if you started selling oil in your own local currencies. But prior to that, we saw that with Gaddafi. We saw that with Hussein, with these nations who produce oil starting to try to do it in the local currency. And America, because it weaponized the US dollar in its conflict with NATO and through the conflict with NATO, I should say, not directly the United States, but with the whole Ukrainian-Russian stance, a lot of these nations woke up and said, well, if they can do that to Russia, they could potentially do that to us. And we're seeing the rise of what we call the BRICS nations. This is Brazil, Russia, India, China, South Africa came into an agreement to basically do economic strength and political ties. Now we've got all these nations wanting to line up. Ethiopia, Egypt, Iran, United Arab Emirates, they're all joined and wanting to form their own bank. So this battle for dominance in terms of nations and their currencies, this is hugely significant, guys. This is history unfolding just before us. And you've got 40 more nations wanting to join the BRICS nations, representing a quarter of the world's economy. This is huge. What they're trying to do is bring down the dominance of the US dollar. Okay, so we're witnessing this as all this is behind the scenes, and it's all the headlines is like, look over here, while all this is going on in the background. And it's always, you've always got to, why are they saying this over here? Look over here, over here. What are they trying to distract you from? The other significant stuff, it's the biggest economy in the world, the US, is facing a major election with the former president who's had at least 2 failed assassination attempts on his life. This is significant. One, you ask, why have there been assassination attempts on his life? What is going there? And I'm going to go down that rabbit warren tonight. That's not the purpose of it. But there's so much upheaval in the US, which in many ways I'm excited about because it's just cleaning out the filth. He's not one of the establishment. He's from outside. And they are concerned. He's come out and said policies like, there will be death penalties for being involved in XYZ crimes. And for those who are in power, if they've been involved with those kind of XYZ crimes, their future isn't looking good if he gets into power. So I think there's a lot of motivation there to discredit him and to try to keep him out of power for those ones who've done the wrong things. We have illegal immigration going on, open borders rampant, not just in the US, but also in England, Ireland, and you could say legally in Australia. It's crazy the amount of people they've allowed in to this nation, artificially pushing up housing prices, which many Australians who aren't in homes are feeling it or have mortgages. Meanwhile, interest rates have been going up through the roof. We've got inflation and people finding it harder to make ends meet, putting food on their table. We're seeing an agenda destroy the middle class, an attempt to rule by a socialist agenda. We saw this week the Federal Reserve just drop interest rates by 50 basis points, which I think is crazy, personally. But what I think they're doing is trying to make things look good as they lead up to an election. They don't want the stock market crashing prior to the election. That would be really bad for the administration in hand. Bad look for them. It can't be the final pin. And you got to understand that there are politics involved in all of this. So it's just fascinating to watch this. To me, it's time to be vigilant and it's time to prepare. I've been particularly in the last 2 years, in this state of just preparation, preparation, preparation. And I'm not just preparing to survive, but I am being strategic about it to thrive. I really want to see people operating from a place of victory. And I'm doing my best to set myself up to take advantage of this youth wealth transfer that's about to occur. And in that space as well, see leadership rise up that are good people, right-standing people in those positions of power, because this is why we've got a lot of the problems that we have to date. It's because of corruption in high places. What's happening in the markets more specifically? This is a screenshot from 2023 last year in May. And I just want to show you this because this is where Trump ended his power, around about here. And we had all the controversy over January 6th. And you can see how that economy worked. It went up, came through, but it was a pretty good rise. You remember the United States was in a recession before that, and Trump wanted to get Americans working again. This dip here is the crash that happened in March of 2020. And then it's kind of rebounded. And look at this incredibly explosive growth. It's just crazy in the last 5 years. This is what it looks like today. So you can see the trends there, and it's just getting bigger and bigger, this expansion of what's going. So this is concerning in many ways. You've got the S&P 500 with an 87% growth, the NASDAQ at 116 and 54% on the Dow Jones, these indices that look at the market. In other words, we're in nosebleed heights, and yet on Struggle Street, and the actual everyday American life is very difficult right now. And so this is not sustainable as far as, looking at this. If you look at a 6-month chart narrowing in, you can see this is not smooth rises. This is up and down, up and down, up and down, all over the place. We're talking about a variation of 5 to 15% there. That's in 6 months, we've got 20% movement in the markets over these major indices. And these are big companies. S&P 500 is the top 500 companies on the US. The NASDAQ is all the big tech stocks, your Netflix, your Microsofts, all those sort of guys, NVIDIA. I'm just going to briefly touch on 10 things I wish I knew before I place my first trade. I think this will give you, speed up the process of learning if this is a space you're really interested in. Trading is all about risk management. I wish I knew this when I started. It is all about risk management. In other words, we know what the upside could potentially be, but what always has to be kept in mind as a trader is what is the downside? What's the potential risk if it goes wrong? Because we don't control the markets. We're not market makers. As traders, we are kind of like guys on the surfboard out there on the waves and looking for opportunity. But this is the big thing. People, what happens is their emotions get involved, the greed and the fear kick in. And especially when the greed kicks in, they often lose sight of risk and what that is. And this is different for the entrepreneur mindset and the employee mindset. It's a different headspace. How do I know? Because I've done all three. I've been an employee, I am a business owner, and I also trade. So it's a different headspace. It's wearing a different cap. And it's very important to be aware of that. The second thing I wish I knew before I started trading, placed my first trade, was that 80% of trading is mindset and 20% is technique. The hard work is what goes on between the ears. It's living with it. It's working through it. It's analyzing things. It's living in the moment and having to make decisions. And so we teach a lot. I teach a lot about mindset with my students because the mindset of a trader is very different, as I mentioned, than an employee or an entrepreneur. And thirdly, trading is a different mindset than investing. Okay. Investing is pretty much long-term growth and gathering. And do I invest? Yes, absolutely. I invest. But that headspace is very different from trading. Knowing how to exit is more important to me than an entry strategy when I'm trading because the end result defines the setup. I discovered it's a very difficult way one time when I was younger. I bought these shares in a privatized company. And then about a year later, I wanted to liquidate them, sell, get out, only to be told you have to find a buyer for your shares. And I was like, well, you didn't tell me that when I got in. And that really taught me a lesson on knowing the exit. So in any business deal and trading and that, I always look at exit. If I need to get out, if it's an emergency, if I need to get access to those funds, can I get access to them? How can I go about that? Which is critically important. The other thing I wish that I knew before I placed my first trade is that it's easy to get into a trade, but it's more important to know how to mitigate it when it doesn't go your way. When they go your way, happy days, fantastic. It's the losses that I've made as a trader that have really taught me the lessons that I've learned, but it's minimizing those losses. And in fact, one of my first mentor once told me, he said, Derek, if you can learn to lose, you'll be a great trader. And I thought, what do you mean by that? I had this confused look. And he said, well, let me put it to you this way. Let's say you put on 10 trades for the month. Four of them lose, two of them, you make $10,000. Sorry, you make $1,000 on each of those 10 trades. You make a total of $10,000. And let's say two of the trades are losers and you lose $4,000 across those two trades. Are you still ahead? I thought about it. Absolutely. I'm $6,000 still up. He said, if you learn to lose as a trader, you'll be a good trader. And that's what he was doing, was stacking the odds and the probability in his favor. Similar to what the casino does when people go gambling on that. He was certainly a probability trader. These days, I do some different strategies, but it was a great lesson. And for me, I grew from there. I discovered that a trader needs to be greater than a one-trick pony. I don't like churning out students who only know one strategy, because if the market changes, then that strategy can be useless to them. They can't think outside the box or think creatively. And sometimes as a trader, I've applied the theory of a different trade to what I'm doing, and you can start putting lots of different moving parts to it to defend what you're trying to, your capital there in those situations when it doesn't go right. We all know the upside, as I said, but the downside is certainly, so the risk is something we've got to be very calculated as a trader. A trader must be disciplined, but flexible enough to adapt to changes in the market. The market always changes. It always changes. We'll see some changes from this announcement of interest rates dropping in the United States. That's going to affect traders and their mindset and investors right now. It was fascinating to see that Warren Buffett pulled all the shares out of Apple. And then it was revealed later that he's also been doing that with Bank of America. Many take that as a bit of a sign. What does he know? We've kind of said, our mindset is this: not having a trade on is a trade. In other words, he's sitting on billions and billions of dollars right now. And some suspect that he's doing that, expecting a market crash, and then will come in and swoop and clean up later and get it for a lot less. That may be his strategy. That's people are always speculating as to what's really going on. But I want to say this, that most people don't know that you can actually make a ton of money when the market crashes. We've made the most money we ever had in our lifetimes during the crash of March 2020. And that was really interesting space to be in when you're seeing all the headlines scream and say, billions of dollars have gone down the gurgler today. And really, money's just changed hands. That's all that's really gone on. It's funny, I had just moved into a house around that, and we're all in lockdown with these wonderful little mandates going on, and the market's been crashing. And I got chatting to my neighbor across the hedge there, and he says, what do you do? Getting to know each other. G'day, mate. How are you? Good. And he asked what I do, and I trade the market with some part of a trading group. He said, oh man, you must have had a rough week. I said, no, we've done all right. We've done pretty good. I didn't tell him how well we're doing. It's kind of, you're grinning from ear to ear, but it's a really weird feeling when everybody's feeling fear around you, uncertainty, and you just absolutely cleaned up. It's a really bizarre feeling, but it's great to be outside that system. And this is why I say there is such opportunity when people are fearful. Not that I like that, not that I want people fearful, but it's having a contrarian view and seeing opportunities in that.
Yes, Derek, I was just going to add to that as well. The data was 277, Buffett sitting on 277 billion, which is 25% of their asset base in cash at the moment. So they definitely know something's afoot.
Yeah, absolutely. And when a big whale like that makes a splash like that, they've got to do it slowly, because if they try to pull it all at once, word gets round, that thing crashes, and they can't sell at a price that's decent. They'll lose money on it. So they subtly have been doing that over months, especially on Bank of America, just to kind of clear the funds. So, yeah, thanks for Paul. That's good. A trader must always be learning. I'm always learning, and deeper rather than wider. I don't try to take on everything. But I look at things in terms of risk and what works. Lifestyle also comes into trading for me as well. Most people can't quit their day job and then just sit on the markets all day long. And so I certainly was not in that position when I started with trading. I had a job and had commitments and all that sort of stuff. So I had to find something that would work around that, but also able to get enough sleep at night to be able to work the next day. And I prefer to go deeper. There's a great little book by Mark Douglas called Trading in the Zone, which all my students, I recommend them to read. but it's understanding the three stages of learning as a trader. And basically, there's the first stage where people are just copying what their mentor has taught them. And this is one of the things I noticed also when I was working in those law accounting firms, is that the people who had most success were ones who'd been mentored by, who were successful at doing that. And so what I try to do in my teaching is kind of adopt a similar type model, where we can do that with groups of students and just walk with them, walk with them, walk with them. So a lot of my students become very good friends. We journey through life together over a long period of time. And I'll show you some of the results a little bit later. The second stage is then they start to get out on their own and they start to experiment a little bit with their own thing, trying that, but keeping in mind the risk. And that goes for a certain period of time. And the final stage that Mike Douglas highlights is mastery, is where it's kind of becomes instinctual after a while. They kind of know what's going to happen in the markets. And they've got that gut instinct that goes with the technique that they're doing. And it's recognizing that it's a process. I'm not into, get rich overnight schemes and that sort of stuff. This is like learning an apprenticeship when you go down this path. And why did I do it? Because I wanted to stay at home and watch the kids grow up. I didn't want to have a corporate job that I had to travel an hour each day to get into town, there and back return trip, 2 hours a day while spending at the office working for the man. I wanted to be around my kids. My family values are very high. It's a high value for me. And I've been able to do that now. Thankfully, COVID has kind of given me with all the lockdowns, if I don't want to tell people what I actually do, I just say I work from home. It's far more acceptable than it was pre-COVID, because back then you kind of get this look at, you actually run a legitimate business and that sort of thing. It's nice. That's always what I wanted. I didn't get there in a straight line, but we did get there in the end. And I think that's the important thing, is identifying what it is from life, what's important to you, what the values are, what you want to change in the world is really important too, when you get to a different level of wealth, and how to manage that. Secondly, next, there's three factors which I've already mentioned that affect the stock market. And this is why I spend so much time on politics, economy, and interest rates. This is really, really critical to understand. I think there's something on the admin side, Paul, you need to look at, that affect the stock market. So politics, economy, and interest rates, they affect each other. I won't go into an example of that tonight. I can show you that, but I can take you through the Trump era, what he did, minimizing tax, how that stimulated the economy, and then interest rates went up to try to pare back inflation, which then caused the market to dip. You can see how the three start interacting together. And those are the three things I'm always looking for in terms of the news feed when it comes to stock market. I, having worked in journalism before, realized that mainstream news is the worst place to get my information for the most part, because they're all reporters that report on what has already occurred. So it's always trying to be ahead of the curve, be ahead of the game, and know what's coming up. That's where the smart money is made. And I hope I'm getting better and better at that over the years, in terms of being able to use that journalistic background for my research skills, but from an economic perspective, seeing how all of it interacts to each other. And that's why you'll hear us, we'll sit around and talk about one of the taboo topics. Politics, we'll talk about it all the time, because we have to be aware of it and know about it and what's going on. The different types of trading, the numerous sorts of derivatives to trade. There's stocks, there's forex, there's commodities, futures, there's options. Those are the main ones. I won't go into all the high-end ones that they do on institutional level today, but one of my favorites is options, because what I discovered is that you could metaphorically insure shares. In other words, if a stock is trading at $20.20, I can buy an option and basically guarantee over a period of time that I will get $20, no matter if the company falls, there's a market crash, or even goes out of business, I will be paid $20. And when I discovered that, I had done my donations to the market, like most traders had to when they start, speculating and getting tips from people over the phone, from somebody else's workplace, and all that sort of stuff. That was my fundamental research at that time. I look back, I go, what was I thinking? But you start somewhere, right? And I was in the media at that time, and I was placing trades in sets of 4 songs. My boss didn't know this because I was bored out of my brains, but I was enjoying reading the business papers and getting an understanding of the butterfly effect, where oil prices might go up and that affects tourism in my hometown, right? And I was going, that's incredible. It happens across the other side of the globe, but it affects us. And this cause and effect was fascinating. And after losing that money, when I discovered that you could metaphorically insure it, I was like, okay, tell me more. And then I discovered that you could potentially make cash flow out of these things, options as well. So if the market's going sideways, like the stock's just going, traders can make cash flow from that at the same time. I was like, okay, that's interesting. I need to learn more. And I just dived into it. And the more I dived into it and learned it, I was like, it was very addictive. It was fantastic because you started to see the stock market in a very different way. So let me give you a big, quick crash lesson on what an option is. Options are a financial contract. That contract word's really, really important. It's legally binding to buy or sell a unit of shares of a certain stock at a specific price point during a defined time frame. And what that's amazing is that because it's a defined time frame, that means you'll get a result at some point, right? It's either going to be a winning trade or going to be a losing trade. And that's a big contrast from mum and dad investors who buy a stock, hang on to it and hope it goes up, right? And that's really, really powerful when you know that you've got to get a result by a certain time frame. The stock market exists to raise capital for a company. Many big corporations started with humble, small beginnings. I own it. A company that started with a few servers in someone's garage. McDonald's, Apple, Dell Computers, through to Walmart, all had very humble beginnings at the start. Traders trade options for three reasons, okay? I've mentioned hedging and protection, that metaphoric insurance. That's what got my interest at first, number two there. And then they've also mentioned cash flow, income. They want to get income coming in. I've often found that property investors come to a point where they max out the credit lines with the banks and they're looking for additional income so they can go buy more property. So they sometimes look to trading to do that. And then there's leverage. And that's the powerful thing of options. For a small outlay, you can control an incredible outlay of stock as opposed to buying it directly. So you'll see some of the results that my students have done in a while, and it's because they've used that leverage of options. And this isn't even using margin, all right? They're not necessarily using margin to do these trades. They're just doing it as cash positions. But because they're not buying the underlying directly, they're using these instruments. They're getting huge results because of the leverage it brings them and minimizes their risk exposure. And that's powerful. There's also 4 different dimensions of trading. The first dimension is buy low, sell high. It's most what mum and dads do. The problem with that is when is low and when is high in the stock market. How do you define that, right? And the other problem with that is you're applying generally a property strategy to the stock market. And you've got to realize that the stock market's a whole different kettle of fish, okay? Money can be made on it going down or going sideways, going up. The market can only move 3 directions, up, down, or sideways. And depending on the strategy, you can make cash flow and money from the various movements. The second dimension is directional strategies or income-based strategies. What these guys are doing, they're typically a technical analysis type guys, and they're looking at all these different graphs and charts and all this sort of thing to try to figure out which direction the strategy, the stock or the market may go next. It's great when you get it right, but what I found the problem is when you get it wrong, it can really hurt in terms of the losses that are made. Third dimension is what I call time-based strategies or income-based strategies. What these time-based strategies are kind of like, the easiest way to understand it is stocks that give you dividend over a period of time. You just collect, there's a lot of guys that'll just buy stocks that dividend paying stocks, and they'll collect that and they'll collect that. With options, you can do that on a weekly basis, monthly basis, annual basis, depending on what the strategy is, what the trader wants to do, and just collecting that revenue. But they are able to create it themselves by going to the market and going, hey, I'm willing to set it up this way, and they just collect and collect. And the fourth dimension, which is probably the biggest favorite of my students, is non-directional. And it's leverage with hedging and protection income. And what it basically does is you may think the stock market will go up or a stock will go up, but we set up the trade in such a way that even if it goes down, we still potentially can make money, which is really, really cool. So if you get it wrong, happy days. You sleep really well at night with this kind of assurance that, you know what? I don't mind if it goes up or down. And the way we do that is we embrace the volatility. While most investors are running to the hills, afraid of volatility, we're looking at the market going, where is the greed? Where is the fear? Where is the action? Let's set this baby up, wind it up, and let's just see this thing move. I don't care if it goes up. I don't care if it goes down. I just want that thing to move in this time frame. And it can be very calculated because they can know upfront how much they stand to lose on this. And the risk here is if it goes sideways and doesn't move, we've got about 4 different adjustments that we can do to mitigate it against any loss, which is really, really powerful. So the strategies to actually exit. And I spend more time on exit with the students and when it goes wrong, so that they have a very good understanding. Because the art of a trader is when it goes wrong, that's when you really see them rise up. If they're getting it right every time, that's great, fantastic. I'll take those any day, but you're not really learning a lot in that experience. And I really spend more time on exit strategies with students as opposed to entry. One of my mentors said to me, I've had about 3 over this period, the problem is not that the market is wrong. You hear a lot of traders go around, oh, this market, it's shocking. Oh, just can you believe this market this week and sort of stuff, you know? And he said to me, remember this, Derek. He said, the problem is not that the market is wrong. The problem is the strategy is wrong. And so what he was highlighting to me was that this is the issue. And so I never forgot that. It was just a gold nugget. So there you go, a summary of the 10 things I wish I knew before I placed my first trade. Trading is all about risk management. 80% of trading is mindset, 20% is technique. Trading is a different mindset than investing. Knowing how to exit is more important than an entry strategy because the end results define the setup. It's easy to get into a trade, but it's more important to know how to mitigate it when it doesn't go your way. A trader needs to be greater than a one-trick pony. A trader must be disciplined, but flexible enough to adapt to changes in the market. A trader must always be learning deeper rather than wider. Understanding the 3 stages of learning as a trader, 3 factors that affect the stock markets, and the different types of trading. That I really wish, if I'd known that from the beginning, that would have saved me years of trying to figure it out. So all this uncertainty in the market, for me, leads to volatility, right? When people are uncertain, fearful, and greedy, that leads to volatility. And it's those black swan events like COVID-19, flash mobs, September 11, that causes uncertainty, which leads to the volatility of the markets and great opportunity when a trader is trading, provided they've got the right strategy. And here's the thing, they're happening more frequently than you can track in history, these market crashes. So the key for me is to be set up for these opportunities as they present, to situate yourself. So how will I receive this wealth transfer when it occurs? Volatility makes investors nervous, as I've mentioned, because they equate it with pain and loss. And our students are taught how to embrace volatility and potentially make huge profits from it. When the crash of March 2020 occurred, we made our biggest profits for that year, and so did some of our students. Here's Daryl. He made over 200% over a number of months in 2020. When it was crashing, just resetting his position continually on some gold stocks. He comes from that industry of the mining industry that he was trading, and he gets consistent results looking at gold, copper, silver stocks. He said to me, I remember what you said, that you wanted to make trading as boring as possible. So with that, I'm really watching my risk in terms of we're trying to keep the gambling out of the equation. That was part of the mindset that I wanted to get out of, get my thrills elsewhere, don't get them here in the market. Steve, over the Christmas break of that year on the 14th of December 2020, pulled off a 53% return on investment on an individual virtual trade. So this wasn't a real live trade. A lot of our students will do paper trading before they go live. This is on a solar company. His second virtual trade locked in 20% ROI over that same period. That's where he's just starting. And he pulled off the biggest virtual trade we've seen to date. The 3rd of March he made on a single trade was 596.9% in one day on a stock called Rocket. That was when the GameStop thing was going on. And he found another one that these guys were trying to talk up on social media against these hedge funds, and he placed a trade on that. Did very well. 2020, Darren turned a virtual account from 100,000 to 144,000 over that 12 months. And he got this result just checking every few days around his very busy business. Dr. Ho Bing held the record for the 2nd biggest live trade with our students. He did 149% return on investment on one single trade on the 11th of May, 2021. It was actually up 300%, but couldn't close out the trade in time because the market was moving so quickly. So we had to settle for 149% after a few weeks. Now, that's a pretty good result. I mean, can you imagine going to the bank saying, hello, I'd like you to give me 149% on my investment over the next few weeks, please? That's just not going to happen. In 2023, we had a mystery trader student replace his former income with trading income. You can watch his testimonial on our YouTube channel there. And then this one happened in May this year. I'll tell you the backstory. Junaid Hassan joined us in February 2022. And before we officially started virtual trading during the course, he was already doing virtual trades. and he gained 64% on a position on Apple, then reset the position for another 10%, and then a bit more for 98%. So he was just resetting it, which is something that we teach our students, so that if it goes down, he still can potentially make money. If it goes up, he's still making money, he's still in the game. Now, obviously, the stock hasn't moved 98%, but he, through options and the strategy we're using, milked it that much. Then one morning, he gives me this call back in 2022, and he put real money on, about $13,700 on a single trade, and it was now worth over $94,000. And he's saying to me, this is on a Saturday, he's wondering if you should close it out for profit. And I'm thinking to myself, well, I know what I would do, but I'm not licensed to advise what he can do. So we had to talk through that situation with him. Well, 2 years later, in May this year, he gives me a call. Now he's up roughly 250%. And I'm kind of like, hang on a second, I thought you got out of that trade. He's like, no, I re-rented it and did all this. I was like, right. In the end, he made an incredible 450% this year, return on investment, which equated to $630,000 in his bank account, Australian. And if you want to watch his full testimonial, how he did it, he was very kind to educate our students and would-be students for us in a couple of sessions. And you can watch that for free on that link. Are they getting large trades all the time like that? No. Those are more the exceptions, but they are frequently making like 15%, 22%, 30%, those kind of figures regularly. And it's the consistency that's important in trading, right? It's just winning trades consistently, and then build them up over time. In fact, one student, he would do this. He would set it up for a long expiry with his options, and then he would just want to get $150 US out of the market, virtual trading. And every time he hit 150 US, boom, he'd get out of it and decide whether he wanted to reset it or not. And he built that account up by this virtual account. He's just gone live now, just started going live. But he built that up over $54,000 over that period in virtual money over 12 months. And he did suffer big losses at one point too. So it was incredible just to see that consistency. And you pull back, you go, yep, that works. And the big trades that they pull off are bonuses. So again, I'm going to ask you this question. How will you set yourself up to take advantage of these wealth transfers, especially if they're happening more frequently in history? We're about to have a big doozy. We're in the middle of a doozy right now. I do a 20 weeks option trading course. If it's interested, we cover mindset, options theory. I mean, the mindset, the trader thinks very differently from others. Options theory. Obviously, you can't play basketball if you don't know the rules. So we have to go through the rules of what options are, what are the legal obligations, etc. Most people want to get to the strategies. Most courses teach about 1 or 2 strategies. We teach probably between 7 to 9 by the time the student's done. I believe in having lots of tools in the toolbox for them to be able to use, and may not use a tool in that toolbox for many years, but it's handy to know. And when it is required, it's be able to pull it out. It's a great thing. Running trading like a business is a big difference between getting a tip at the water cooler and a hint versus getting consistent results over time as a business does. And there's a big difference in that game. We teach on that. And then we want to see our students do paper trading and virtual trading. So actually apply the theory. And that's when you see the light bulbs go on and go, now I understand what Derek means by intrinsic value. Now I understand what he means by time decay. Now I understand what the risk is about. And now I can see the leverage in all of this. So we go over, as I mentioned, about 7 strategies that traders trade options for these 3 reasons: income, hedging, protection, and leverage. We go through all different strategies that cover those goals in mind. How does it work practically? We send you 2 hours of video a week to watch in your time. Then we do a live workshop over Zoom for an hour to go over the material during the week. And the advantage of that is that students then get to ask me questions live. And I get a very quick understanding as to where they're at, what they're understanding, and we can just fill in any gaps in the understanding very quickly. I've been doing this for about 11 years now, so I've got it down pretty well. And it also holds students accountable. I found if students do online material just by themselves, they tend to procrastinate. But having a weekly workshop, they know I'm going to say, hey, how are you going with the material this week? And it keeps them moving. And so you learn about 7 to 10 years worth of information in just 20 weeks. We sell it for $11,995. If you pay up front, you get a massive discount, $9,995. And we've already taken enrollments now. I've got somebody lined up. And if you'd like to enroll, simply email me. Let me know that you've seen this with Paul, a conscious investor. And if you sign up within 48 hours of receiving this material, not only will we give you a free 30-minute consult with myself to go through any questions you have, but we'll also give you the Trader Starter Kit free, which is valued at $369 as a bonus for taking action. So, yeah, there we go. Any questions that you might have? I'm open to taking those now.
Okay, great. I might just stop the recording there, Derek, and then we can jump in the private question section if we can.